Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Wednesday, the 9th of January, 2007, and we finally had some buying in the markets today. The S&P 500 closed with a gain of 1.22%, and we had pretty good volume in here as well. The market didn't quite come down on the SPY to test the August lows, but you can see that it was pretty close to it. And again, the market had gotten really oversold over the last few days, and there's still a very clear downtrend here. It looks as though maybe we're due for a little bit more of a bounce here the next few days, but with a declining 10, 20, 50, and 200-day moving average, this market remains guilty till proven innocent, and any long side opportunities that you're taking in here ought to be considered just trades. And even on the intermediate term time frames, we've still got a very bad downtrend here. We've got the declining 5-day moving average, obviously. The market did turn around intraday. You can see that it made a lower low, and then the market shot higher here late in the day. And it's good to see that the buyers did come in after the late in the day, and it was able to hold above this prior little level of support here at about 140 or so. So the 140 level had been support for a couple days this week. The market broke below it, made a lower high and lower low this morning, and then finally we took that out. We're still not ready to launch significantly higher, I don't think. The market probably needs to heal a little bit in here. Maybe it runs up towards that 5-day moving average, pulls back, and then we could see this 140 level act as support. Would be really a nice scenario to see. And maybe we could build a little inverted head and shoulders pattern that looks something like this. And then breaking past 142 could lead up to, well, that would give us a target up near 146 or so. We're still, though, in a downtrend, so don't get too excited about one day's action, but it is encouraging to see that the volume came in on the upward move in here, and then we saw a low volume in here on this little pullback, and then a resumption of the volume again. I had posted on my blog right here that it looked like the buyers were back in control as it rallied back above that daily VWAP, and that I was getting long there with a stop just under the VWAP. So the market did give us reason for a potential trade, and it did work out. So you can see here how this level of resistance was tested and held as support on the lower volume pullback. So anything that you're used to analyzing on a daily time frame or weekly time frame makes sense on these 1 and 2 minute time frames as well. So the market is still, a lot of mixed signals in here. I still believe it's a day trader's opportunity, and there were some great opportunities in there once again today. So hopefully your skill set is there to take advantage of them. The semiconductors, these guys came down to about 354 was the low in there, 354.5. And as you know, we've been looking at the 350 level from the what was this? I guess 2004, September of 2004 lows to be tested. That's close enough, I'd say, for a successful test. But there's nothing on this chart here that suggests that it's a buy. If we get a bounce, the obvious level where we're going to find potential supply or resistance would be about 380. So the semiconductors are deeply damaged. The 10-minute time frame still in a horrible decline. Best case scenario is here we start to build a little bit of support. The market heals time-wise, and then maybe it can begin to build a more solid level of support to rally from. But again, there's just nothing clear here that indicates any sign of a bottom. A bottom is a process, not an event. We get these one-day turnarounds, and sometimes we get some great turnarounds that develop after these types of moves, but the trend is still lower. It's guilty till proven innocent. The IWM, Russell 2000, as we know, the key level we've been watching in here is a 73. It broke that late last week and has been stuck under there. As we saw, we had a test of that yesterday that did act as resistance. Today we saw this green candle. This market closed up 1.1%. It's still down horribly for the year. It's still got a declining 10, 20, 50, 100, 200-day moving average. So it's still in a primary downtrend, but the rubber band has really gotten stretched to the downside, and some kind of bounce would not be out of line here, and something that I think most people have been looking for, myself included. But you know, I've got a couple calls. That's all I have. I was trading the long side late in the afternoon, but I sold all my stock because I'm thinking that the market got stretched here very short term. Maybe it pulls back to the $70 level, and then it can you know, build a higher low and then take out this high and start creating a pattern of higher highs and higher lows. We still don't have that yet. We need to see a higher low successfully hold near about $70, I think would be the logical place to look for that. That's also about where we have, or almost exactly where we have today's daily VWAP, and that's where the buyers took control there as well. So at that point, the average, the average transaction was, long side transaction was profitable when it rallied above that daily VWAP, and that's the way you want to look at it on a 1 minute time frame. So again, we're probably at some kind of little crossroads here for the market. We remain in a horrible decline, so if you're going to trade the long side, honor your stops because there's no telling exactly where that bottom is, but clearly the market has sold off very deeply in here, and you've got to understand the psychology of the other participants out there. Think about the short sellers who've been correct on this market. At some point, they've got to look at it and say, where do I cover? Well, they start to cover. Their demand adds a little bit of support to the market. Other sideline cash sees that happening, or maybe the sellers see that there's more bids entering the market, so they slow their source of supply to the market. Sideline cash comes in and starts to buy offers instead of bidding for the stock. It all creates just a little subtle change in the supply-demand dynamics that allows the market to gradually shift. Then enough people start to believe it, we have an absence of supply, we have more demand, and then the market continues to rally. Now this 48.50 level is going to be the more significant level of potential resistance for this market, as it had been the important support as it traded between that 48.50 and the 52.50. So we saw a nice volume in here today, not as big as yesterday, but we did see that the market was able to recover nicely from a pretty bad decline in here again today. The market rallied up late in the day, tested that VWAP, found resistance, then that level became support, and then a nice rally into the close. So when we look at the 10-minute time frame, what you see here is that this is the key level, and it's more about 48.75. And something else that's interesting is you take a VWAP line, and what I'm going to do is start it right here on January 2nd and draw straight across. You see how that line's moving, even though my pencil isn't. That's the VWAP year to date. The average price that the Qs have traded at year to date is 48.60. So that level, that increases the importance of that level, and getting back above there, then the average buy transaction will have been profitable. Again, though, we've still got this horrible decline. We've got the declining 5-day moving average. We've got multiple trend lines that you can draw where we're seeing resistance. And what I'd like to see here is a pullback, maybe down towards about 47.20 or so, 47.15, and then see that level successfully hold and then begin a rally. But it's still a very dangerous market for most participants. It's a day trading environment, but we're starting to see a little bit of relief here on the very short-term time frames. But again, it doesn't do anything to change this big mess that we're seeing on the longer time frame. So continue to be very careful and trade defensively.